But let's address the macros and, let's really find out what's happening with the current state of the macros. What's the prediction for 2025? B. Prasanna joins in on the show right now from ICICI Bank to talk about exactly that. Prasanna, hi. Firstly, wish you a very happy new year from all of us.
Very happy New Year to you and the entire team and to all the people watching ET now.
Thank you so much. So tell us how the performance you think of different asset classes in 2024 matched up to how you think 2025 is going to unfold.
So I think 24, you could describe it as a tale of two halves. What happened in the first 6, 7, 8 months of the year was nothing when compared to what's been happening since October. And what we called as the Trump trade truly started playing out from October. And if you really look at the various asset classes, let's say, for example, the dollar index itself, it has appreciated by close to 8% in just this 3-month period from around 100.5, 101 in October to around 108.5 as we speak. A lot of emerging market currencies have all depreciated substantially, whether you look at the Brazilian real, the Korean won, South African rand, and so on and so forth. And against all of that, you would say the INR is depreciated by much lesser to the extent of, say, 2 to 2.5%. Along with this, the asset classes which have also performed as per the Trump trade was the bond yields in the US, which kind of went up all the way from 3.6% in September to something around 4.6% as we speak. And equity markets in the US have been quite strong. So all in all, I think what happened till October was very different, and October, November, and December have been all these asset classes which have been performing as the way I described. Going forward into 2025, I do feel that we're going to see more of what we have seen in the last 2 months happening over the next 1 month or so for sure. So the short term looks like pretty much more of the same. But as Trump takes office and starts making his announcements, there could be a lot of volatility with respect to what the markets were expecting and what announcements are really coming through, whether the Trump tariffs are really as harsh as what market was fearing. Whether the tax cuts on corporate income, corporate taxes are going to be cut as much as what the market was thinking, and so on and so forth. So there's going to be a lot of volatility as we go forward. But somewhere I think that the strength of the dollar continues for maybe a month more, after which we would say, buy on rumor, sell on news kind of a trade possibly playing out, in which case the dollar might have peaked in terms of its strength.
Prasanna, that's exactly what my next question is about. The rupee depreciation has been the highest in December in the last 2 years. Do you think there's more to come? What's the worst level that you're spotting on the rupee? Do you think an 87 perhaps is closer than we think? And when do you think the RBI will intervene to take steps, if at all?
No, I think the RBI has been taking steps every day. So the depreciation that you are seeing on a daily basis is despite the intervention that RBI has been doing. Bear in mind that we have lost reserves to the extent of close to $50 billion on the spot side. And on top of it, the RBI has outstanding forward dollar sales positions, both in the onshore and the offshore market. So I think the RBI has been intervening, maybe intervening a little less, I would say, in the last, say, 15 days to a month. And the fact of the matter is that the dollar strength has actually taken all the emerging market currencies by storm. So it's not really a rupee story alone. And when you compare rupee's depreciation against most of the other currencies that I spoke about, like whether it's the EM Asia currencies or even the Latin American currencies, I think the depreciation has been substantially much more than what has happened on the INR. Even the Chinese yuan has depreciated by 4%. So I think the single most important factor that could possibly influence the dollar rupee as we go forward is what happens to the dollar yuan and what happens to the tariff on Chinese imports that President Trump announces when he takes office. So I think those were the important things that we need to look out for. If you have to talk about a level, I do think that definitely we are in for some depreciation. Now, it depends upon RBI how much they're going to allow the depreciation to happen. I would say 86.5 by March and 87 to 87.5 by this calendar year end sometime is definitely something which is possibly going to happen.
Right, I'm just going to mark M&M's total vehicle sales because I think so far out of the auto majors which have come out with their December data, M&M is the only one which has managed to beat the street estimates. 22,943 crore units. Not crore actually, 22,000 units, and the total vehicle sales as well have managed to beat what the ET Now poll was actually penciling in. So good going for M&M clearly. But Prasanna, I just wanted to understand what your take is on the trade deficit widening, which it has to its highest levels as of November 24. Where do you think that's going to pan out, and what sort of announcements then would the budget assumptions have?
So on the trade deficit side, I think definitely there has been an expansion which was not expected maybe 3-4 months ago. And we were at around $22 billion per month on an average, and that actually shot up to close to $35-36 billion in the last month. And a lot of it has happened also because of the increase in the gold imports, some of which could be double counting, and the issues are getting sorted out. But even if you had to remove potential double counting in it, I think at $30 billion, let's say, the trade deficit is substantially higher. So what it has done is it has increased our estimate for the current account deficit from around 0.9% to around 1.2% of GDP this year, and around 1.2% for next year as well. And what's clearly happening is when global growth is slightly slowing down, when INR has appreciated against most of the other currencies other than the dollar, it does make life a little bit more difficult for our exports to flow through. So I think from that perspective, we do have a deteriorating view of the current account deficit, but bear in mind that this is far, far lower than what is considered as a very scary number in the international market, which is in excess of 2% of GDP. We are still around 1.2, 1.3% of GDP for the next year. And that's also primarily because of the fact that the services exports in India continue to fire very well. Remittances in India is also remittances into India is also firing quite well. So these two are actually kind of creating a cushion. What really is a problem from a BOP or from a macro perspective is the kind of outflows that you have seen into from the FPI equity selling. And that is almost close to 175,000 crores over the last 3 months. And so that is what has led to our BOP estimate coming down from a positive. Earlier, it used to be $20 billion, then we revised it down to 10. Now looks like it will be kind of close to neutral for this year. So I think that's the real play. So when you really speak about the dollar rupee exchange rate, there are two things which are happening. One is the dollar strength, and the second is the weakening BOP numbers. So these are the two things which are actually worrying the markets.
Another thing that's causing some concern in the market is the inflation data that we've been seeing of late. Inflation has been higher, with sticky food inflation persisting for some time now. GDP growth, although is expected to pick up in the second half, it was expected and it's lower than the expected levels. Do you think that the RBI's expectations of 6.6% GDP growth is still realistic? Is it still possible?
So our estimate for FY25 GDP is 6.5%, and we have a downward bias. So we do think that, bear in mind that the RBI in its monthly bulletin has already reduced its GDP forecast from what they had said in the policy in December. So I suspect that when they come out with the policy estimate in February, they would bring down their GDP estimate further. I think more in the lines of 6.3 to 6.5 is what I would assume. Having said that, I think if you're looking at corporate commentaries and the kind of earnings numbers that are going to come, I think the Q3 still looks a little dicey. I think the real recovery is hopefully going to happen in Q4. The high frequency indicators of Q3 is also not given that much of a promise. So while we do believe that growth is bottoming out and we do expect growth to pick up as we go forward, I think Q4 is where the pickup is going to happen. Q3 estimate for us is going to be in the region of 6.3%. Having said that, I think inflation, to answer your question, while the current inflation reading is on the higher side with a 5.5% kind of a handle, we do expect inflation to come down drastically as we go forward. We're going to reach somewhere the 4% handle in the next quarter. And the FY26 average for RBI is below 4% in the latest bulletin, while we are still at slightly above 4%. So food prices coming down as vegetable prices fall is something to look forward to. And core inflation, while already at 4 or less than 4, the fact that international commodity prices and China, whatever is happening in China also, filtering through to lower prices also does make the case for a lower core inflation as we go forward. So all in all, I think inflation is kind of hit the peak and it's going to come down as we go forward. The real question is, does RBI really, act on expected inflation in its policy in February?
If you like this video, then like, share and subscribe to ET Now.